What's up, guys? Welcome back to Flipping Finance with Greggy B. Today is going to be part 2 of a video that I started to make on dividend versus growth investing. So if you haven't seen the first part of this about dividend investing, go check out that earlier video. So today we're going to talk about investing in growth stocks. So I'll give the quick synopsis on how growth stocks differ from dividend stocks. And I won't spend too long on that because I know we want to jump right into the actual stocks. So I'll give out those ticker symbols. I'll let you guys know which stocks I think are going to show the best returns, show the most growth, and companies that I think are going to dominate their industry and their stock price is going to move in relation to that. Let's jump right in. All right, as I give this quick synopsis on what a growth stock is, I'm going to toss up the Robin portfolio right here so I can give you guys an update since things have changed just a bit. In that regard, I haven't put any more money in since last time we saw the portfolio, which was probably somewhere in this range. Stocks have just performed really well in December. We're doing a good job. We're looking at the all-time return here approaching 200%, which is very exciting. I honestly want to put more money into invest. Even though the market's at all-time highs, there are stocks that I see that are still undervalued and I think have potential. So don't really have much money to throw in right now, and I'm fine kind of moving money around, which I'll talk about a couple plays that I've made. But this is an update of where the portfolio is, and obviously having another good day today here, Monday, December 28th. Now, quick synopsis on growth stocks. We're talking about stocks that generate substantial and sustainable cash flow, whose revenues and earnings are better than other companies in their industries. They crush their revenues, they crush their earnings, they show that they have strong year-over-year growth, companies that are motoring ahead with innovation. All right, that's enough of the synopsis. Let's jump in here and look at an obvious, but one that we can't go without talking about, which is going to be Tesla. Now, Tesla, unfortunately, I wasn't in sooner, but we'll still take the average cost of, a little under 380 here at 10 shares. But basically, I don't need to really explain what a growth stock is when you can just look at this chart. This is growing. Let's go to a company like Bank of America. All right, more of a cyclical, stable stock. Look at the 5-year. It's still up 75% in 5 years, but look at the 1 year, down 15%. Okay, but you can see the movement from, let's see, 2017 here, all the way through now. The stock price hasn't fluctuated that much. Bank of America is a dividend stock, so it's a cyclical, financial stock that pays you the dividend, and it's a good company. I think it's going to keep growing, but not in the same sort of way that Tesla is going to grow. Tesla. So look at the 5-year here as compared to the Bank of America growth that we saw at 75%. We're looking at, look at that growth. 1,344% in 5 years. Parabolic. It's different. It's a parabola, but it's like a million parabolas smushed together to create its own little fractal. Thanks, Elon. Keep crushing it. So that's one growth play there. Let's go over another mainstream one, and then I'll give you some low-key ones as well. So the next growth stock we're going to be talking about is Fubo, ticker symbol FUBO. Now, this is included in the more mainstream growth stocks I'm discussing, and then I'm going to give you 2 more low-key plays. This might still seem low-key to some of you, but definitely mainstream if you've been watching other YouTubers or other YouTube stock videos. This stock has blown up recently. Actually went all the way over $60. I'm not even screen recording here. Let me get this screen record going. So we're going to take a look at Fubo stock in my Webull account. This is the first time I'm actually showing the Webull app on this channel here. And I'll reveal some things that I have in this account. It's a much smaller account than my Robinhood, but I do still have about $1.5 grand in holdings here. So we'll talk about some of these play, but it's just a more relaxed account, if you will. But let's take a look at Fubo here. And we can see the daily. This picked up a ton of traction last week. It was on CNBC. We had about 5 days in a row, just intense buying, taking it all the way from $25 over the 62 mark. And now it's cooled off. It has cooled off significantly. It was chilling in the 38s today, 37s. I think it hit 36.50 today. So definitely some buying opportunities for Fubo if you think it's going to be a long-term growth play, which I believe so. I think Fubo, I think Roku, I think Netflix, I think Disney Plus. I just think there's more space in the streaming realm, and these guys at Fubo are doing things that these other streaming companies aren't offering. They're offering a lot more live TV. They're talking about potentially partnering up with sports betting implications. So lots of exciting things for Fubo, and the percentage loss in the last few days is insane. So if you're looking for buying the dip in a play that you think is gonna act like a growth company for 2021 and beyond, this is a good opportunity for Fubo here. Ticker FUBO. All right, next growth stock we're going to get into is YETI, ticker symbol YETI, YETI. You guys are probably familiar with this brand, and this one might actually seem more mainstream than Fubo. So when I say Fubo, you might be like, what's Fubo? And YETI, like I know YETI, but hear me out. YETI just doesn't have the volume that Fubo's been having recently. It's been a slow grinder of a bull story, just a bull run. This stock has been an absolute moon mission, blowing through all highs, just consistently setting new highs. We've had a little bit of a pullback. You can see here, had some selling over the last week and a half, 2 weeks. We hit our all-time high for YETI just south of $75 here not too long ago. Looks like that was on December 22nd. Had a pretty rough day today, pulled back almost 5% YETI. So I'd be looking in here, just looking at my chops. I'm in here, I only have 8 shares, just under $50. Obviously you can't see this because you would only be able to see that in my Robinhood portfolio. We're looking through the Webull charts right now, which I prefer to look at these charts. And then quick sidebar, if you want to get 4 free stocks through Webull or free stock through Robinhood, sign up with my link below. I'm going to leave that in there. You got to deposit $100 in Webull, but let me know if you have any questions about that. Set up your brokerage accounts. So I think this YETI stock is going to continue to charge on forward, and we might see little pullbacks here and there, but I think this brand is too strong, and a lot of people are paying up for these products, and they're fine with the higher end outdoor gear, and they're just in love with this brand. So I'm a big YETI fan of the products, fan of the stock, and here's another play that I want you guys to take a look at. Obviously, always do your own due diligence and research. Ticker symbol YETI, that's YETI. All right, it's time for one more growth stock. It is Tuesday morning, December 29th. Starbucks sponsored me for getting 37 views. Come on now, you can do it. All right, we got one more growth stock to discuss this morning. This one's gonna be CleanSpark, ticker symbol CLSK. Obviously, we switched up the environment. I'm not upstairs in the room. We got the babe sleeping up there. When I say babe, I mean not that babe, but my babe. So we're recording this down here. I want to finish this up and get this posted before the market opens Tuesday, so you guys can pick up some of these stocks sooner rather than later if you'd like. So this next low-key growth stock we got is CleanSpark, ticker symbol CLSK. Another one you might be rolling your eyes, being like, Greg, this isn't low-key. Everyone's talking about CleanSpark now. Yes, people are hopping on this. I luckily saw that their debt to asset ratio was incredible. I saw their microgrid technology having a lot of purpose. They're finding areas where energy is being overused, and they're filtering it in a new way to try to preserve as much energy as possible through microgrid technology. So you can look into it, but it's pretty sweet. I got in here at 18 and it shot up all the way to 30 now, and it's sitting, I think, right in the 29s in the pre-market here. So this has gone vertical, but it continues to go that way, and I think a lot of big money is just still hopping in at these prices. So take a look at CleanSpark, ticker symbol CLSK. All right, we're gonna do one more stock here. This is kind of a bonus stock because I wasn't planning to do another one, but I want you guys to take a look at Enphase Energy, ticker symbol ENPH. This is the one where you kick yourself in the butt for. Me and my buddy were talking about this stock. I was talking to him back in July when it was in the 40s, and now this stock is, I think, at $175. And at the time, I was like, oh, it's kind of had a run because it went from I watched it go from 20 to 40. But this is just a good lesson to take away. When you believe in a company and it has a good run, don't shy away from it just because of the valuation. Always, sometimes these solar companies and these growth companies have more room to run. You don't want to just watch it go up and up and up and miss the train completely. So even if you just buy a couple shares, initiate a position, I think at that point, as it goes up, you're actually more inclined to average up once you've already established a position and you're not just starting at zero. So check out Enphase Energy. This is supposedly one of those Biden stocks. I think someone on CNBC called this the perfect Biden stock. So it's a bit overjuiced at this point. So I would take a look at CleanSpark as a little bit more up and coming that hasn't been so hyped yet. But both of these companies have really good debt to asset ratios. They both are doing very well within their industries. So take a look. All right, that's gonna do it for the growth stock video, guys. Thank you so much for watching. The Webull and Robinhood links are down below, so go ahead and sign up for those brokerage accounts. If you got $100 lying around, you can get some free stocks. And message me, text me, comment if you need help signing up for either of those accounts. They obviously ask for your personal information because it's a brokerage, but if you guys want to just get started with some very basic investing, not using a lot of money, and just to watch some percentage gains that you can't watch in your bank account as the money just sits there. Because I know a lot of people are you know, timid getting into the market. A lot of people are a bit intimidated when it comes to the stock market. One of the purposes of this channel is to take down some of those barriers and not make it as scary, and show that there are ways for not just people on Wall Street or Main Street to make all the money. The little guy can get a piece of the pie as well. So thank you guys for watching. Like and subscribe, all that basic. Sorry, I took that from my man Mojax. All right, you know the deal. Like, comment, subscribe. I'll catch you guys in the next one. Peace.